Today, ladies and gentlemen, like I said, it's a pleasure to be with all of you. I will be presenting an academic overview of recent global forecasts for the market size of tokenized assets by 2030. And I believe I'm very, very lucky to be after Dr. Hatem because he mentioned that the global skilled worker are going to have a shortage by 2030 of about 85 million. So hopefully this presentation is going to complement by offering solutions and ideas and forecasts related to 2030 as well. Throughout the session, I will explain what tokenization means. For example, this research in particular will draw from latest projections published between 2022 and 2025 by well-known consultancies, financial institutions, and public data sources. Let's begin with the introduction for now. Would you like to know the meaning of tokenized assets? Would you like to know how can tokenized assets transform traditional corporate government structures? Would you like to know, would they transform corporate governance structures by 2030 in response to economic and technological shifts, which is the theme, I believe, of our conference today? Let's begin with the basic definition of tokenized assets. Tokenized assets refer to the digital representation of real world assets, but on a blockchain. Like real estates, company shares, debt instruments, recorded and traded on blockchain platforms. For example, if you will, you can imagine a real estate property worth $1 million. It could be divided into 10,000 digital tokens on the blockchain, each representing a fractional share. These tokens could then be bought or sold on a blockchain platform, allowing more people to invest small amounts in high-value assets. As you can tell, this market is actually opening opportunities for the young generations as well, especially fresh graduates. Because I usually receive students asking me for means of investments that could be more easy than those that require stringent regulations and identity KYC verifications. Tokenization brings several benefits. It can improve asset liquidity, simplify compliance and transfer processes, and enable fractional ownership, like I mentioned. This could include a revolutionary idea of transforming entirely an IPO, initial public offering, into an ICO, or a security token offering on the blockchain. So rather than registering the company for stock market regulations or Security Exchange Commission, you can just offer investors to buy tokens and become shareholders of that company on the blockchain. More transparent, rapid, and very easy, especially for the users. These improvements reduce barriers to entry, as I mentioned, and increase accessibility for a wider range of investors. It's important to note that this study explicitly excludes actually tokenized currencies such as central bank digital currencies and stablecoins. Our focus is on financial assets and investment products, not transactional digital currencies. Tokenization of real-world assets is increasingly being recognized as a foundational layer in the emerging digital economy. Now, let's take a look at the broader context of tokenization forecasts. Multiple institutions, including McKinsey, Boston Consulting Group, Statista, Citi, Roland Berger, and others, they have released the projections for the tokenized asset market by the year 2030. These estimates range widely from as low as $2 trillion to as high as $27 trillion. The significance variance in these forecasts stems from different assumptions about regulatory developments, institutional adoption, and which type of assets are included. Some forecasts include only tokenized funds and bonds, while others include real estate, arts, and private equity as well. Despite this range, though, there is no consensus around certain key themes. More forecasts agree that real estate debt instruments and investment funds will play leading roles actually in driving tokenization. These sectors are typically high value and historically liquid, making them ideal candidates for blockchain-based representations. This slide introduces some of the academic work on how tokenization is transforming corporate governance. According to Blimus and Gugan 2020, initial crypto assets offerings, also called as ICO, or token generation events, have introduced a new category of stakeholders in governance, which is token holders, right? These stakeholders have different roles compared to traditional stakeholders. And this is especially impactful in SMEs, small, medium-sized enterprises, and decentralized startups. Tokenization is not just about financing, it reshapes decision-making processes, enhances transparency through smart contracts, and reduces the need for traditional intermediaries. This leads to lower costs and potentially more democratic governance systems. You can read more about these resources at the reference list that I'm going to share at the end of this presentation. Agostini 2024 emphasizes that tokenization improves transparency and accountability while removing layers of inefficiency in traditional governance systems. His study in corporate governance, participants, mechanisms, and performance proposes that tokenization could democratize corporate control through real-time, secure shareholder voting. Another angle is presented by Kolyasov et al. 2022, who study how digital assets, especially tokens, affect centralized versus decentralized corporate forms. They describe a hybrid corporate platform model and analyze the emergence of decentralized autonomous organizations. In other words, the DAOs. This hybrid model blends cooperative and fund principles under decentralization, which are, of course, key concerns. You can find definitely that resource in the reference list at the end as well, which I'm going to share. In this particular part of the presentation, I will explain the methodology used for the research, which is very simple. The study follows a mixed method approach that combines both qualitative and quantitative analysis. Through academic literature and white paper review and quantitative insights using secondary data, the data was gathered from publicly available consulting reports, peer-reviewed academic articles, and blockchain databases like CryptQ and Tally. I focused on market size projections, asset class coverage, and structural changes introduced by tokenized governance models. All sources were selected based on recency, reputability, and verifiability, ensuring the results are hopefully credible and current. Continuing with the methodology, I'd like to elaborate on how the data was sourced and analyzed. Academic literature was identified through research engines like Consensus, Gestor, and Google Scholar. Market data was structured in comparative tables and charts. Only peer-reviewed or highly authority sources were used. I also relied heavily on institutional publications as those by McKinsey, BCG, Citi, Statista, and the WEF, World Economic Forum. To make the findings comparable, all market forecasts were compiled into structured tables and visualized as charts. This helped me triangulate insights from different domains, academic, basically industry, and empirical blockchain data. This multi-source triangulation increased the validity of our conclusions by cross-verifying claims through independent datasets. The slide explains the approach taken for data collection. I compiled forecasts and tokenization projections from 8 reputable organizations published between 2022 and 2025. These included consulting firms, as I mentioned, McKinsey, BCG, Roland Berger, financial institutions like Citigroup, and global organizations like the WEF, academic and public research platforms like Statista and Forbes Technology Council. Only public verifiable sources were used, and each was documented with either a DOI or a direct website link to ensure academic integrity. More importantly, the data collection excluded definitely the stablecoins or the central bank digital currencies to keep the focus on tokenized real world and financial assets, such as real estates, funds, and bonds. Now, let's take a look at the data analysis process. I organized the projections from 8 sources into a comparative table, which I'm going to display in the next slide. And what you see right now is the evidence of the $30 trillion market projection by 2030 presented by Security Token Market, and I attached this in the reference list for your kind consideration as well. If we take the stable coins out of the equation or the graph, this gives us the mentioned number of $27 trillion. Now the table. This is the comparative table. Later, of course, I decided to visualize this data in chart form to better identify patterns. If the table data is converted into a chart, this is what it looks like. And most projections agreed that real estate, debt instruments, and investment funds would be the primary drivers of growth. The variance in projections stems largely from different assumptions about technology adoption rates, inclusion of asset categories, and how regulators in key markets are expected to respond to tokenization. This comparative analysis enabled us to triangulate insights and draw well-rounded conclusions about the likely scope and impact of tokenized assets by 2030. In conclusion, this research shows that tokenized assets are no longer speculative. Currently, the market cap of cryptocurrencies is exactly almost $3.3 trillion. This market we're talking about of security token offerings and asset tokenization is expected to be 27, if not more, $trillion by 2030. This begs the question of whether to solve certain issues related to technological developments and innovation, especially those discussed by Dr. Hatem, are going to be hopefully overcome by paying attention and concentrating into a market like the tokenization assets market. This market is currently, in my opinion, small compared to all of these resources combined, giving some projections about the year 2030. So the time for action is now. The time for action to get engaged into not only this kind of technology of blockchain, but changing the entire business model of companies worldwide. Tokenizing assets is extremely important and is going to play definitely a bigger role in the future. It's to be noted that this research is a kind of untraditional when it comes to the methodology. So rather than just relying on historical data in order to answer a question, the current situation, it actually uses some sort of predictive analytics into the year 2030. Based on public data and credible sources, the projection is about 27 trillion by 2030. These forecasts reflect a growing consensus that asset tokenization will dramatically expand market participation, improve liquidity, and increase transparency. The most commonly identified drivers across all reports are tokenized real estates, fixed income instruments like bonds, and investment funds. These asset classes are typically less liquid and stand to benefit most from tokenization. While the outlook is promising, tokenization remains in its early phases. That's why I said our chance is now to take action. For it to scale meaningfully, regulatory clarity and technical infrastructure are essential. Different countries have taken very different stances on tokenized securities and ownership models. This fragmentation creates friction that could delay adoption. I actually worked on multiple projects here in Mexico myself, and many of which were very successful and many of which disappeared afterwards. Going forward, a collaboration between policymakers, institutions, and technology providers will be key. Areas for future research include adoption trajectories across regions and sectors, integration of decentralized autonomous organizations into corporate governance, and the harmonization of legal frameworks governing digital assets. Now we can summarize by answering the research question, which is, how can tokenized assets transform digital corporate governance structure? And the answer is that tokenized assets indeed change corporate governance by using digital systems to handle key decisions like voting and ownership directly and automatically on the blockchain. The answer to the second question, would they transform corporate governance structures by 2030, is yes. Tokenized assets will likely play a foundational role by 2030, according to predictive analytics. 5 seconds for the references, just in case you want to take a screenshot. And this is the second slide for the references. And before I go, I would like to say a big thank you for our audience. If you would like to get in touch with me through LinkedIn, just scan the QR code. I am very active and excited to network and communicate with any like-minded and energetic people, regardless of distance and age. Thank you very much. It was a pleasure, and looking forward to your questions.